Welcome to a Super Bowl edition of DeepTech315. First question for y'all. Guess who the Eagles fan is? We'll hear more from Doug at the very end on that. But we'll jump into the A topic here, which was we heard from Google and Amazon on the critical CapEx numbers. As a reminder, last week when we heard from Meta and Microsoft, they were all in on increasing the spending, and not just increasing it, but at a level that I think surprised most people. And when you put all four of those together, the four hyperscalers, and look at where the expectations were for CapEx growth in calendar 25 before they reported the quarter, it was 22% growth. So that's from 24 to 25. Now, after the revisions, it's 40%. So if you would have taken us back to DeepSeek Monday and said that the hyperscalers are going to increase from 22 to 40%, I would have said probability of that is low. Probability that they inch it up was high, but making from 22 to 40, that jump I would have said was unlikely. And what would have been more surprising to me is that kind of this lethargic response from some of the big companies, and specifically NVIDIA, that traded down 17, 18%, has gained some of it back, but still down 10% from where it was before DeepSeek Monday. And then you have kind of a broader basket that we look at of kind of the focused AI hardware companies, and they're still down 10%. Now the Nasdaq's down 2% from where we were before DeepSeek Monday. And so I think when you put this together, myself and a lot of people are pounding the table like, this is so good for the AI spend and the endorsement from some of the most sophisticated companies in the world, but investors just aren't buying it.
I think it's just the old Benjamin Graham quote in action, which is, in the short term, the market is a voting machine. Long term, it's weighing. It's not about the fundamentals. It's just about the fact that there is some investors, and maybe they're not even really investors, they're probably short-term speculators, where they've just sort of exited the train. And I don't think that they're ready to come back in because they feel like the trade now is vulnerable. Doesn't matter that the CapEx has gone back up. It's purely a reality of psychological momentum. And so if you're trying
by the way,
to
that vulnerability is this idea of we're cruising along and we got sideswiped by DeepSeek, and
by this, right?
It could
and
be
what could be
something
the
else.
next DeepSeek? There will be another. There will be another event where we have a breakthrough, whether it's with models, whether we have some new hardware architecture maybe that comes out that kind of gives people pause. It will absolutely happen again before it is all said and over. And so I think it's just that, if you're trying to really figure out, like, how is the market missing this fundamental change in terms of how these big companies are talking about CapEx? I would say you're actually missing the reality of just the psychology of markets, and it's just going to take time.
I would agree that there's like this risk that we never had an event like that, down 17% for a big company to do that. That's pretty surprising. I also think kind of the feeling going into this, before we even had the DeepSeek, the feeling was like, how long is this going to last? And if you look at what NVIDIA was trading at on calendar 26 numbers, it was pretty modest, trading in the mid 20%, growing earnings at 25 to 30%. And we've talked before about how their business was down in the quarter before, revenue was down in the quarter before this all took off 2 years ago. And I still think there's this, I agree that there's people who are trading it, and that has kind of shocked the system. A reminder, like, this thing can unwind pretty quickly, beware. But I also think it plays into this concern of, like, when's the party going to end? And as I kind of think that forward, like, when is the party going to end? I think this year is going to turn out to be a much better year for NVIDIA than people realize. They're going to report on the 26th. When they give guidance, the expectations, because the hyperscalers told us how they're spending, the expectations now is that they're going to raise guidance. And I don't think that necessarily does anything for the stock. This is near-term trading stuff, but I think that that's probably more or less priced in right now, that they're going to have positive outlook. But as kind of these positive data points trickle in the next few months, you get back to that weighing machine versus the voting machine. And I think it kind of reestablishes excitement around where this trade can go. And so I want to get your take on just that piece. Do you think that NVIDIA's earnings is going to be a catalyst relative to this overall AI hardware trade?
I think it definitely will help. And when the DeepSeek thing happened, I think we both felt like, the warning signals will not abate until we hear from NVIDIA. They actually got to come out and tell us that they're not seeing any issues. Obviously, all of their big customers have basically already said they're not planning to slow down, but I think it will be another cathartic moment to hear from NVIDIA itself. But I also think, again, it's one of those things where time is the best, the best healer. And I think that's true in markets too with momentum. When you lose momentum, recapturing momentum, I think, is hard because
Right.
people have these conceptions that they've developed about why they wanted to exit and not keep up with the momentum from before. And so it's a matter of, yes, NVIDIA, I think, as potentially a catalyst, their earnings, that could help. But I also, it might just be one day, some random Tuesday where there's no news, where something, for whatever reason, somebody makes a big trade and these things start to break out. And maybe that's the moment. And then it's like,
Mhm.
hey, maybe you get momentum back there. I wouldn't bet all my money that like one event, whether it's NVIDIA earnings or something else, is the all clear.
We're on the same page that what matters most is what we heard from the hyperscalers, and that's the kind of the fundamental piece to this. And if we play this forward, and there's some combination of events that kind of get the momentum to return, because it was remarkable the acceleration that we've heard from on the CapEx front. As we kind of play forward to the end of the year, is it too early to be thinking about 2026? Usually the markets look out about a year. That's the part that concerns me. Is I'm optimistic that the numbers are going to go up measurably higher than where people think for 2025. But the piece I don't know is when 2026 is going to get discounted to a point, because the better 2025 is, the more difficult the comps are for 26.
I think it's more of an art than a science. Like you never really know. And again, I think we're in this orbit where we're talking a lot about the fundamentals. And I think one thing that is very true about bubbles is that fundamentals are things that people talk about, but stories are ultimately what make these really big bull markets continue to have really long legs. So that doesn't give a pass to any of these companies to not show momentum coming from the AI trade. But when we get into these nuances of like, when is the market going to care about 26? The answer is who knows? And the reality is they're going to start caring about 26 when some story justifies whoever has momentum to make a story around
Mm-hmm.
26. That's not a hard answer, but I think it's the truest answer you can give. And so maybe if the momentum comes back to the AI trade, people are going to start caring a lot about 26 really fast. Because if you look at the numbers, NVIDIA trading close to 21, I think, or 22 times
Mm-hmm.
what 26 expectations are, then you've got this
Yeah.
great narrative if you're a momentum. But hey, if it's still this bear case, then people might keep pushing that out for a long time.
Uh, Good perspective. We're still on the same page that we think we are early and ultimately what AI can do. And so we'll shift to our second topic, which is AMD just having a tough time. Stock down this week after earnings, and they're just kind of having difficulty. Essentially, these products that were supposed to compete with NVIDIA just aren't getting the traction that they were hoping. And I think as you think about just the hardware piece of this, I mean, does AMD have like a real shot at gaining measurable market share from NVIDIA over the next few years?
That's been the hopeful narrative around the stock. It feels like for like 18 months almost at
Mhm.
this point. And it's one of those where you always you get stocks where people make these pitches where it's like, yeah, but look, they've only got 5% market share. What if they just got to 8%? 3% is a huge deal. The problem is the products just aren't very good. The reason they have 5% market share is because everybody is much more comfortable using NVIDIA hardware, or if they're building their own custom silicon, they're using Broadcom. And so I think that's been the challenge. Is you look at what they talked about in the call this week. Back half of 24 revenue, first half of 25 revenue is going to look about the same. And so, in this boom market and
You
you're
can't. You got to do
flat
better than that.
one half versus the next, that's
Yeah.
crazy. And I think that says everything about where they are in terms of customer demand for their products, despite the narrative that, these hyperscalers are dying to have a second source of chips.
I think it's easy to say you're going to have a compelling product against NVIDIA. It's extremely hard to do. And I think that's what's playing out with AMD right now. And wish them the best of luck. And we'll jump to our final topic, which is Uber, a company that we have not talked as much about. Getting the nod from Bill Ackman, the stock is up almost 25% year to date. And there's this kind of competing narratives around Uber. Of course, one is that it's cheap and they're just continuing to gain market share from Lyft. And then the second piece is just eventually they got to get a play on autonomy, and their partner with autonomy is Waymo. And how does that relationship ultimately figure itself out? And I want to focus on that autonomous piece, because we're going to really fast forward 3-5 years from now and think about that's the reality. And I just want to check in where you're at. Is the reality of these ride sharing businesses, do they need to have an autonomous, basically the stakes in the ground to have some autonomy opportunity in the next 2 to 5 years?
I think they do, and it seems like, I mean, certainly in Uber's case, they're happy to figure out partnerships to try to make that a reality. Obviously, they've abandoned, their efforts that they had going for their own autonomy platform, which I think is probably the right move. I mean, the reality is that's where the industry has gone. I mean, it's two players at this
Right.
point. I mean, it's Tesla and Waymo, and I don't think anybody else is even really that close. And so, yes, I think the answer, they should try to rely on partners to have a play in autonomy. But I think it's really all about demand. I mean, that's what these companies have created, is this demand platform
Just
where
top of funnel.
as long as consumers know to go to Uber to say, hey, I'm going to find, a reliable ride, and as long as they can maintain that brand, then they will be a great, whether it's a lead source to go send riders to their ride sharing partner, or use it with their own human traffic network as a redundancy or first source, however you look at it. I think that will, allow them to at least have a place at the table. I'm not saying that's the best business in the world, but I don't think it means that they're automatic zeros, at least not in the next several years.
Definitely not automatic zeros, but if we put ourselves in Waymo's shoes here, right now, they're not spending any time with top of funnel. They're just focusing on the technology, the rollout. Uber traded off a few weeks ago on this press release that Waymo put out that said they're going to be rolling out in Miami. I think it was at the end of this year or the end of next year, and it'll be available on the Waymo One app. And it didn't mention Uber, and so people immediately jumped to the conclusion, present company included, that puts the Uber relationship at risk. And as I just think about this for the next 10 years, and the type of investments that they're making in autonomy isn't for having a nice business in the next 2 years. It's to create a big business over the next decade. Is that why would you want to understand that there's demand coming now from using a partner like Uber, but eventually, wouldn't you want to just turn Uber off? And because it's actually a better experience. I believe it's a better experience for consumers to have an autonomous ride. Don't have to talk to the driver, safer. So from, isn't this just, we're kind of marking time before the inevitable, which is Uber cuts bait and just builds their own brand around rideshare?
I think this goes back to everything we've always talked about autonomy, which is if you are super bullish about the pace of autonomous adoption and rollout, then maybe that's true. I think the reality of the world is going to look more like this. There are some cases where you will have an autonomous option, or maybe you prefer that. There won't always be an autonomous option available. There may be certain roads where you can't use the autonomous option. You need to have a human redundancy. And so my
That's
view is,
fair.
and
Yeah.
just like think about it like an AI agent. AI agents are really great. Can they do literally everything? No.
No. Yeah.
We have a
You got to have a
great
human
startup.
step in.
Well, and we have a great startup in our venture portfolio, Payman, who's literally trying to build a solution to solve this, right? Their platform not only allows AI agents to pay humans to do work, but it can understand where an AI agent can't do what it needs to do, and insource a human, right, to backfill that. And I think the same thing may be true when we talk about autonomy. You may not always be able to get the autonomous ride. You may have to have that human network.
Right.
And so the value of the human network, you may actually argue, goes up, because if you want a platform that can fully source all demand, and that's what a consumer
Right.
wants. You don't want
Consumer wants
Uber,
one and done.
right?
Yep.
You
You don't
don't
want to
want
think
Waymo to
about
say,
it.
sorry, I can't take you.
Right. You
That's
just
a
want a
useless
ride.
app to me. So I think you're
Yeah.
undervaluing how valuable that human network will be, or maybe I should say, you may be undervaluing how long it will probably be relevant.
Fair. Last topic. We're going to do something that I enjoy doing. I don't know if you enjoy doing this, but make a very specific prediction here on the Super Bowl. You're, of course, lifetime Philly fan. I don't know where we haven't talked about this. Can I get a score?
Score, I'll go 34-24 Eagles.
34-24. I had a
34-24
similar
Eagles.
score, 21-10 Chiefs. And
It's not
so that's
similar at all.
kind of a similar gap, but
Yeah, there you go.
we are. It's going to be three-peat. I'm not saying I like the Chiefs. I'm just saying I think the Chiefs are going to win. I hope for your sake the
There you
Eagles
go.
win, but my predictions on the Chiefs. On behalf of Deep Tech, bye for now.